Do you believe the Fed is done raising rates?
I think at this point, if they continue to raise rates, even though they want the economy to slow down, they're going to cause a bubble to rip across a bunch of markets that they don't plan to. So I've been asking for the last 2 years, why haven't they announced that we were in a recession? Somebody finally told me 2 weeks ago that if they reveal that we are in a recession right now, it will become clear to the public, and it will have to be reported on, that many pension funds are actually negative at this time. And there will be a revolt by the people. So I don't think they can afford to raise interest rates any higher, especially with the cost of mortgages being damn near double what they were last year, with very little consumer confidence. 74% of people who were polled over the last month are not optimistic about the economy, and that includes people that make over $2 million a year. Going into an election cycle, I don't think either presidential candidate wants rates to go higher because it diminishes their chance for actually winning, and anyone running doesn't want that either. And also the Fed chair has to worry about will he be replaced when that time is needed. So I think for the foreseeable future, they need to stop raising rates and go into a plan of just keeping rates at where they are until at least one sector begins to stabilize. If you have the auto workers striking, like I said, Hollywood just came out of a strike, crypto's in shambles. We only have probably 7 to 12 companies that are viable outside of the Magnificent Seven. That is a recipe for disaster, and they keep kicking this can down the road. I don't think they can afford to raise rates any higher.
So you think they're stopping him?
They have to, unless he wants to get fucking fired.
Yeah, I mean, all signs.
Please, no profanity. Please.
YouTube?
What?
Huh?
What?
We're trying to,
children. Okay,
yeah, children are
Oh,
watching.
we got children and sponsors.
Please.
I'll self-boot. Look at Rashad trying to control your narrative.
Yo, he trying to control your energy. Nah,
Dave Dashwood, you can't let another man tell you what to say.
But last week he was cursing, man. He trying to control you, bro. See, let me get back to this energy. My energy, correct? I got you see my sleeve?
Mm-hmm.
You know what I'm saying?
Family, big family.
My brother. Yeah. So I mean, all signs are pointing to maybe one more raise. This is it's unfortunate. Bad things have to happen in our economy, and people are going to be casualties of the bad things. And so, in order for us to stop raising rates, they have to see things like delinquency rates, which are increasing, unemployment. They need to see that increase, and they are. And that's unfortunate. So if we look at delinquency rates when it comes to consumer loans, like credit cards, auto loans, that has gone up over the past year and a half. The consumer bankruptcy filings, this is interesting, that has also gone up. But there is something that has started today that is also going to cause a large number of
I hope we're thinking the same thing. Yep.
And that is student loan repayments.
Yep.
It's been 3 years. We haven't paid. Time has come.
Let's do it.
Now, all these things are going to affect whether or not interest rates will stop being raised. It's unfortunate, right? Like, we have to have bad things happen in order for them to take a stance and say, all right, we're gonna stop doing this. So all signs are pointing to maybe one more. But if news keeps coming in that these numbers are rising, there'll be more potential for them to be lenient and say, all right, well, the economy is moving in a direction that we like. We don't have to raise it. Spending has come down. Let's stay here.
3 points real quick. BMO Bank has disclosed that mortgages worth $32.8 billion were negatively amortized in Canada in the third quarter. The U.S. government is currently spending more than $33 trillion in national debt, so that is higher than what we're spending on national defense. That's from the U.S. Treasury. Not Dr. Umar. Shout to Dr. Umar. And New York City is facing a level of homelessness we have not seen since the Great Depression in the 1930s. Unless he wants to get fired, I don't know how unless they're making him do it. Like, we are spending more on the interests of our national debt, not the principal, interest, than we are national defense. While BRICS is hanging together in a section every weekend trying to get their arms and gold together. I even saw that report. The United States has more gold than all the BRICS combined. Show it to me.
Show it to me.
Where?
Show me
I
what you
haven't
got.
seen one Federal Reserve chairman bring up our gold reserves ever. Greenspan, what are we talking about? What? If that's true, I got the Statue of Liberty for sale for you if you want it.
Oh, they selling the Brooklyn Bridge.
What? I can sell the Brooklyn Nets to you too if you want.
No, they selling gold bars at Costco's.
They selling the
Seen that?
Brooklyn Bridge.
I did.
Costco's
And
is
they selling
gold
out. All gold bricks. Selling out immediately.
bars.
Hey.
Trinidad that James would be proud.
Gold all in my chain. Put yes in chat if we made you money. And on top of that, it's the funniest investment show ever. Come on, don't believe me, just watch. What? Come on. Come on. Listen, I mean, listen, mortgage payments are eat up 60% of household earnings in Canada and 63% in the United States. That's for those of you who are not geography majors, that's damn near all of North America. 60% of your capital is going out the door. Things are so bad that JP Morgan, BlackRock, and Vanguard are actively fighting how to eat up all of the retail housing market as a hedge.
And one of the other part of it is, I'm glad you distinguished the difference between paying interest and paying the principal.
Yep.
So we haven't really seen the totality, like the even like the short term effects, right? Because if they just raised the rate to, let's say, 5.5%, that just went into effect. You won't see the effects of that to maybe 6 to 12, 18 months. So that's where we're headed with this.
Yep.
Be mindful.
Quick homework assignment: go research who was the company that instituted credit cards at scale, and how, since they've done that, there's a reason why all the credit card companies are in Idaho, in Sioux Falls, Idaho, because there are technically laws that limit how much you can charge, but unless you're in Idaho, you can charge a lot more. And that credit cycle has seeped its way into every business that we are involved in now. You know, the cat's out of the bag. It's too late to kind of put it back in, but I think we have to go back to an environment where we are spending what we can afford to spend, but also these banks and entities need to be regulated. As much disaster that is coming, the banks and institutions never get blamed. When FTX fell out, you know who was never blamed? All the organizations that put money into FTX. I'm gonna keep it clean because I don't want y'all to get no calls either. But at some point, we got to go to the top of the food chain.
Top of the food chain.
Yeah, do things. Gemini remove swings.